Welcome to the knowledge of cash flow statement. Here we are going to learn what is cash flow statement, what are the usefulness of cash flow statement, classification of cash flows, methods of preparing cash flow statement, sources of information to prepare cash flow statement, preparation of cash flow statement under direct method. Now we are going to learn what is cash flow statement. Cash flow statement is a statement which reports cash receipts, cash payments, and net change in cash. A statement of cash flows indicates where the company's cash comes from and how the company uses its cash. What are the usefulness of cash flow statement? Cash flow statement is prepared with a view to knowing the entity's ability in generating future cash flows, knowing the entity's ability to pay dividends, knowing the entity's ability to meet obligations, identifying the reasons for difference between net income and net cash flow from operating activities, knowing the amount of assets increased or decreased during the period by investing activities, knowing the amount of liabilities increased or decreased during the period by financing activities. So these are the usefulness of preparing cash flow statement. Now we are going to learn classification of cash flows. Cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. So we can see there are three types of cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. Operating activities involve income statement items. Investing activities involve cash flows resulting from changes in investment and long-term asset items. Financing activities involve cash flows resulting from changes in long-term liability and stockholder security items. So whenever we need to prepare cash flow statement, we need information. So generally there are three sources of information to prepare cash flow statement. The first one is comparative balance sheets. Here comparative balance sheet means 2 years balance sheet. And then current year income statement data. And the last one is additional detailed information to determine how the company provided or used cash during the period. So from these three sources of information, we will be able to prepare cash flow statements. Whenever we are preparing the cash flow statement, we may face some non-cash items which should not be included in cash flow statement. The examples of non-cash items which should not be included in the cash flow statement are direct issuance of common stock to purchase assets, conversion of bonds into common stock, direct issuance of debt to purchase assets, exchanges of plant assets. So these are the non-cash items. We will not include this item in the cash flow statement. What should we do? The above non-cash items are reported separately at the bottom of the statement of cash flows. So in the main cash flow statement, we will not show these items. We will show these items at the bottom of the cash flow statements. So whenever we need to calculate cash flows from operating activities, again I am repeating, whenever we are preparing cash flows from operating activities, we need to analyze the current year income statement, current assets and liabilities from comparative balance sheets, and selected additional data if needed. And whenever we are calculating cash flows from investing activities, again cash flows from investing activities, we need to analyze the long-term assets items from the comparative balance sheet and the selected additional data. And whenever we need to calculate cash flows from financing activities, we need to analyze the equity items from the comparative balance sheet and selected additional data. So, methods of preparing cash flow statements. Generally, there are two types of methods, and these methods are only applicable for calculating the cash flows from operating activities. That means indirect method or direct method, and this method only applicable for cash flows from operating activities. In order to calculate cash flows from operating activities, a company must convert net income from an accrual basis to a cash basis. This conversion may be done by either of two methods. Number one is indirect method, number two is direct method. Both methods arrive at the same total amount. I mean, whenever we apply indirect method or direct method, the result will be same. I'm again repeating that this method are only applicable for cash flows from operating activities. The indirect method adjusts net income for items that do not affect cash. The direct method shows operating cash receipts and payments, making it more consistent with the objective of the statement of cash flows. So, in this tutorial, we will learn how to prepare cash flow statement under direct method. Under the direct method, companies compute net cash provided by operating activities by adjusting each item in the income statement from the accrual basis to the cash basis. Generally, we compute or adjust the following items for the direct method: cash received from customers, cash receipts from the other sources, cash payment to suppliers for inventory, cash payment for operating expenses, cash payment for interest expenses, cash payment for income tax expenses, etc. Now we are going to introduce the items of cash inflows and outflows. Items of cash inflows from operating activities. In these operating activities, generally we take information from income statement items and as well as acquired assets and liabilities items. So the examples of cash inflows under operating activities are if we sell any products or materials or goods, or if we provide services. On the other hand, the other example of cash inflows if we receive any interest or if we receive any dividends. So these are the examples of cash inflows under operating activities. Now we can see the examples of cash outflows under operating activities are if we pay suppliers for inventory, if we pay employees for service rendered by them, if we pay governments for taxes, if we pay lenders for interest expense, if we pay other persons for any other expenses. Now we are going to see the items of cash flows from investing activities. Generally, we collect information for investing activities from the long-term investments and long-term asset related items. Now we can see the examples of cash inflows under investing activities are if we sell property, plant and equipment, or if we sell investments in debt or equity, securities of other entities from collection of principal on loans to other entities. The examples of cash outflows under investing activities are if we purchase property, plant and equipment, if we purchase investments in debt or equity securities of other entities, or if we make loans to other entities. Now we are going to introduce the items of cash flows from financing activities. The information to calculate cash flows from financing activities, we get information from the long-term liabilities related item like long-term bonds, long-term liabilities, long-term notes payable, as well as from stockholders' equity. We can see the examples of cash inflows under financing activities are from sale of stock, that means if we sell common stock or if we issue common stock, and from issuance of long-term debt, that means if we issue long-term debenture, long-term bonds, long-term notes payable. The examples of cash outflows under financing activities are if we pay dividend to the shareholders, if we redeem long-term debt, or if we reacquire capital stock or treasury stock. Now we are going to be familiar about the question format. Here we can see the question condensed financial data of Livan Limited company are shown below. Here we can see there is a comparative balance sheet. Comparative balance sheet means two-year balance sheet. Here we can see the balance sheet of 2015 and here we can see the balance sheet of 2016. We will compare these two balances of comparative balance sheets. We can see in the upper level of comparative balance sheets there are current assets, then long-term assets. On the other hand, in the liabilities and equity section we can see current liabilities, long-term liabilities and equity. In the question as well as with the comparative balance sheets there will be a income statement, current year income statement. Here we can see income statement for the year and December 2016. This is the income and these are the expenses. From this income statement and from this comparative balance sheet we will prepare cash flow statement. With this two information, comparative balance sheet as well as income statement, there will be some additional information. Whenever we consider any items in the comparative balance sheets as well as in the income statement, we should also focus on additional information if there is any clear indication, if there is any clear explanation of any item. And at the last stage of our question we can see instruction, prepare a statement of cash flows using the direct method. In this tutorial we are going to learn how to prepare cash flow statement under direct method. To prepare cash flow statement under direct method, whenever we are calculating the cash flows from operating activities, we need to do some calculations. The first calculation is cash receipts from customers. To calculate the cash receipts from customer, we will write sales revenue. This item can be found in the income statement. With this sales revenue, if there is a decrease in account receivable, we will add it with the sales revenue. Or if there is a increase in account receivable, we will deduct it. After adjusting account receivable with the sales revenue, we will get the amount cash receipts from customer. So let's get back to the question. In the question we can see the amount of sales revenue is 297,500. So with this sales revenue we will adjust increase decrease of account receivable. Here we can see in the comparative balance sheet the amount of account receivable in 2015 is 37,000 and the amount of account receivable in 2016 is 60,800. You can see there is an increase of accounts receivable. So if there is an increase in account receivable, we will deduct this increase of account receivable from the sales revenue. Let's see it practically. We can see the calculation. Here the computation of cash receipts from customer, the amount of sales revenue is 297,500 and we have deducted the increase in account receivable. The amount of increase is 23,800. So if we deduct this 23,800 from the sales revenue, we will get the amount of cash receipts from customer. The amount of cash receipts of customer is 273,700. Now we are going to write this amount of cash receipts from customer 273,700 in the main cash flow statement. This is the main cash flow statement. Here we can see the solution, Livan Limited Company statement of cash flows under direct method for the year ended December 31, 2016. You can see we have calculated this amount cash receipts from customers 273,700. We have written it under the cash flows from operating activities. So the cash flows from operating activities, the first inflow is cash receipts from customer. Now we are going to see the second calculation under direct method to calculate the cash flows from operating activities. Here we can see cash payments to suppliers. To calculate the cash payment to supplier, we need cost of goods sold. This cost of goods sold can be found in the income statement. With this cost of goods sold, we need to adjust inventory. If there is an increase in inventory, we will add with the cost of goods sold, or if there is a decrease in inventory, we will deduct from the cost of goods sold. So after adjusting inventory with the cost of goods sold, we will get the amount of purchase. With this amount of purchase, we will adjust accounts payable. If there is a decrease in accounts payable, we will add this amount with the purchase, or if there is an increase in accounts payable, we will deduct the amount with the purchase. After adjusting accounts payable with the purchase, we will get the final amount cash payment to suppliers. So here in the question we can see in the income statement the cost of goods sold amount is 99,460. So with this cost of goods sold we will adjust inventory. So for inventory we will go to the comparative balance sheet. Here you can see the amount of inventory amount in 2015 is 102,650 and in 2016 the amount of inventory is 126,900. So clearly we can see there is an increase in inventory. So this increase should be added with the cost of goods sold. Let's see the calculation practically. So here we can see the computation of cash payment to suppliers. So To calculate the cash payment to suppliers, we need to write cost of goods sold. So the cost of goods sold amount is 99,460. We have seen that there is an increase in inventory, so we have added this increase in inventory. The amount of increase in inventory is 24,250. So if we add this increase in inventory with the cost of goods sold, we will get the amount purchases. The amount of purchases here 123,710. After that, with the purchase, we will adjust accounts payable. So let's get back to the question to see the amount of accounts payable. So in the question, we can see the amount of accounts payable in the comparative balance sheet here. The accounts payable in the 2015, the amount is 48,280, and the amount of accounts payable in 2016 is 57,700. So you will adjust this increase. Clearly we can see there is a increase. We will adjust this increase with the purchase amount. Let's get back to the calculation. So in the calculation we have seen that the purchase amount is 123,710. With this purchase we will deduct increase in accounts payable. The amount of increase in accounts payable is 9,420. So if we deduct this increase in accounts payable from the purchase, we will get the cash payment to supplier. The amount of cash payment to suppliers is 114,290. Now we are going to write this amount to the main cash flow statement. So this is the main cash flow statement. Here we can see we need to write cash payment to suppliers. The amount is 114,290. This is the cash outflow. That's why we have written it under the bracket, because bracket means outflow. Now we are going to see the third calculation. The calculation is cash payments for operating expenses. Here we can see we will take this operating expense from the income statement, and with this operating expenses we will add increase in prepaid expense, or we will deduct decrease in prepaid expense. So prepaid expense can be found in the comparative balance sheet. Let's get back to the question. So this is the income statement. From this income statement we will take the amount operating expense. So here the operating expense excluding depreciation expense is 19,670. So with this operating expense we will adjust prepaid expense for operating expenses. Now we are going to see the is there any prepaid operating expense. Here we can see in the current assets section there is no prepaid expense for operating expenses, so we don't need to adjust this prepaid expense. There is a amount of accrued expense payable, so this amount should be adjusted. In the formula we have also seen that we will add decrease in accrued expense payable, or we will deduct increase in accrued expense payable. We have seen that in the question there is no prepaid expense but there is a accrued expense, so we will adjust accrued expense with the operating expense. The adjustment is if there is a decrease in accrued expense payable we will add, or if there is an increase in accrued expense payable we will deduct. Then we will get the amount cash payment for operating expenses. Let's get back to the question. So this is the operating expense. The amount is 19,670, and there is a accrued expense payable. The amount of accrued expense payable in 2015 is 18,830, and the amount of accrued expense payable in 2016 is 15,100. So let's see the real calculation. So this is the calculation. Computation of cash payments for operating expenses. We have seen the operating expense amount is 19,670, and we have adjusted decrease in accrued expense payable. We have added this decrease in accrued expense payable with the operating expense. The amount is 3,730. So after adjustment we can see the cash payments for operating expenses is 23,400. So we are going to write it to the main cash flow statement. So here we can see we have written cash payments for operating expenses. The amount is outflow amount, that's why we have written in bracket. So the amount is 23,400. So this is another outflow, cash payments for operating expenses. So from the question in the income statement we can see there are other expenses. Depreciation expense 30,500. This is a non-cash item. We will not include this non-cash item in the cash flow statement. Non-cash item should be avoided. We can see another item, income taxes expense. The amount is 37,270. We will adjust it with the prepaid or accrued expense, but we don't see any prepaid expense regarding income taxes, and we don't see any accrued expense payable regarding income tax expense. So we will write this amount to the main cash flow statement without any adjustment. So here we can see the cash payments for income tax expenses. The amount is a outflow, that's why we have written in bracket 37,270. In this income tax expense there was no prepaid expense or there was no accrued expense, that's why we have written this amount directly to the main cash flow statement. But if there was any prepaid expense regarding income tax, or if there is any accrued expense regarding income tax, we need to adjust. Since in this mail there is no prepaid or there is no accrued regarding income tax expense, we have written it directly to the main cash flow statement. The amount is 37,270. So from the question in the income statement, we can see another expense, interest expense. The amount is 2,940. So it's an expense. We are going to see is there any prepaid expense or accrued expense regarding interest expense. So in the comparative balance sheet, we can see there is no prepaid expense regarding interest expense, as well as in the current liability there is no accrued interest expense. So this interest expense amount should be directly written in the main cash flow statement. Here we can see we have written cash payments for interest expense directly here, 2,940. There was no adjustment because there was no prepaid or accrued expense regarding interest expense, so we have written it directly here. So now we are going to calculation for cash flows from operating activities. Here we can see cash receipts from customer, it's inflow to 73,700, and cash payment to suppliers, it's an outflow. Cash payment for operating expenses, it's an outflow. Cash payment for income tax expense, it's an outflow. Cash payment for interest expense, it's an outflow. So if we adjust this inflow and outflow, we will get a positive figure 95,800. Since the inflow is higher than the outflow, that is why there is a positive figure. Such type of positive figure will be shown as a name net cash provided by operating activities. Since the inflow is higher than the outflow, we have written net cash provided by operating activities. But if there was a higher outflow than inflow, we will write net cash used by operating activities. Now we are in the second part of cash flow statement. In the second part, we will prepare cash flows from investing activities. We will prepare this part from taking information from the comparative balance sheet, I mean long-term assets, long-term investments, and long-term property, plant, and equipment. So let's get back to the question. So in the question, now we are in the comparative balance sheet. We can see long-term assets are investment and plant assets, and another one is accumulated depreciation. This is not a asset, but it's a contra asset. From this long-term asset, we will prepare the cash flows from investing activities. Here we can see the investments. The amount of investment in 2015 is 107,000, and in the 2016 the amount of investment is 79,500. So there is a decrease of investment. There may be a sale. To be sure, we should look for any additional information. Here we can see in the additional information, you can see investments were sold at cost. So there is a sale of investment. So we are going to show it in the main cash flow statement as a sale of investment. It will be an inflow for investing activities. So in the cash flow statement, we can see cash flows from investing activities. Under this heading, we have written sale of investment. This is an inflow of cash. So here the amount is 27,500. Let's get back to the question. So in the question, at the long-term assets section, we can see there is another long-term asset. Name of the long-term asset is plant asset. The balance of plant asset in 2015 is 205,000, and the amount of plant asset in 2016 is 315,000. So clearly we can see there is an increase of plant asset. To be sure about the increase of plant asset, we should look for the additional information. In the additional information, we can see new plant asset costing taka 146,000 were purchased for cash during the year. So there is a purchase of plant asset. If we purchase any asset, there will be a cash outflow. So we will show this 146,000 cash outflow in the investing activities. As well as another additional information is showing that plant asset costing taka 36,000 were sold for taka 15,000, resulting a gain of taka 5,000. Costing taka 36,000. The amount of sold is 15,000. We will not focus on gain, we will not focus on cost, just we will focus on the amount of cash inflow. If there is a sale of asset, there will be a cash inflow. Here the cash inflow is 15,000. Here we can see there is a outflow of cash because there is a purchase of asset. So we are going to write these two information in the main cash flow statement. Let's get back to the solution. So here we can see we have written purchase of plant asset. So it's the outflow. The amount of purchase is 146,000. So it's the outflow. We have written it in bracket to show that it's a outflow. And there is another item, sale of plant asset. This is the inflow. The amount of inflow is 15,000. In this cash flows from investing activities, sale of investment, it's a inflow. Purchase of plant asset, it's a outflow. Sale of plant asset, it's a inflow. If we adjust these three items, inflow, outflow, and inflow, the ultimate balance will be 103,500. Outflow is higher than the inflow. So if the outflow is higher than the inflow, we will write net cash used by investing activities. In the third stage of cash flow statement, we prepare cash flows from financing activities. This section can be prepared by taking information from the long-term liabilities like long-term bonds, long-term notes payable, and equity items. So get back to the question. In the comparative balance sheet at the long-term notes payable or bonds payable or long-term liabilities, we can see there is a long-term bonds payable. Here the amount of long-term bonds payable in 2015 is 70,000, and the amount of long-term bonds payable in 2016 is 145,000. So there is an increase of bonds payable. So there may be a issuance of bond. To be sure, we are in the additional information. There is no additional information regarding bonds payable. So we are depending on this information. From this information, we can see that there is an increase of bonds payable. That means there is a issuance of bonds payable. If we issue bond, there will be a inflow of cash. So let's get back to the solution. So here we can see cash flows from financing activities. First item is issuance of bonds payable. The issuance of bonds payable will result a cash inflow. Here the amount of inflow is 75,000. Now we are going back to the question. So in the question we can see common stock. Here the amount of common stock in 2015 is 200,000 and the amount of common stock in 2016 is 250,000. So there is an increase of common stock. To be sure, we should look for any additional information. Here in the additional information there is no specific indication. We will consider this information as a increase of common stock. That means there is a issuance of common stock. So if there is a issue of common stock, there will be inflow of cash. So let's get back to the solution. So in the solution we can see issuance of common stock. The amount of issue is 50,000. So here the amount of 50,000 is a cash inflow. And after that we will show payment of cash dividend. We will get this information in the additional information. So let's get back to the question. The payment of dividend information can be found in the additional information. We can see a cash dividend of Taka 48,000 was declared and paid during the year. So there is a payment of dividend. So if there is a payment of dividend, there will be a cash outflow. So let's back to the solution. Here we can see payment of cash dividend 48,000. So we have written this amount in bracket because it's a outflow. Now we will adjust these three items. 75,000 it's a inflow from issuance of bond, 50,000 it's a inflow from issuance of common stock, and there is an outflow 48,000 from payment of dividend. So if we adjust these two inflow and with the outflow, ultimate result is 77,000. It's a positive figure because the inflow is higher than the outflow. So amount is 77,000. If the inflow is higher, then we generally say it net cash provided by financing activities. We are in the last stage of cash flow statement. From the cash flows from operating activities, there is a higher inflow. That is why we have written net cash provided by operating activities. And in the cash flows from investing activities, there is a higher outflow. We have written net cash used by investing activities. And in the last part we can see cash flows from financing activities. There is a higher inflow. We have written net cash provided by financing activities. So this is inflow, this is outflow, and this is inflow. So if we adjust this three item 95,800, 103,500 and 77,000 inflow outflow, there will be a net increase in cash and the amount is 69,300. So this is the increase of cash during the period. With this amount we will write the cash at beginning of period. If we add this beginning amount of cash with the increased amount of cash, we will get the cash at end of the period. That means closing cash. This is the opening cash and this is the closing cash. So we are going to see whether it is true or not in the question. So in the question we can see the cash balance. The opening balance is 33,400 and the closing balance is 102,700. So this is same to the solution. So the math is okay. Thank you.